Hello guys, you're welcome to my YouTube channel. This is Synthetic Goddess. On this YouTube channel, I teach strategies to become a profitable trader even if you're a beginner. So if you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. And if you're an existing viewer, you're welcome back to this video. Based on high demand, I decided to create a Telegram channel for synthetic traders. So if you would love to join my Telegram channel where we share analysis, where we share our thoughts, just check the description box and click on the link to join my Telegram channel. So in this video, I want to teach perfect way to read structure, the perfect way for you to read structure. And I'm going to be showing a detailed example of reading structure in this video. So stay tuned to the end. If you've been reading structure wrongly, you are going to know in this video. And if you've been reading it correctly but you are confused, you are going to be enlightened in this video. So I'm going to be using step index for this video. I trade the synthetic indices. So if you would love to trade with my broker, check the description box also and click on the link to register for my broker. You can trade 24 hours in 7 days. You can trade 24 hours in 7 days, and the volatility is very nice and very okay, and it is very simple to master. So yes, let's go straight into the video. When we talk about reading structure correctly, let's just check the weekly time frame. We're going to start from the weekly time frame. Before anything, if you want to read structure, if you want to understand your structure very well, all you have to do is start from the higher time frame. Start from the higher time frame. Don't start from the lower time frame because it can get confusing on the way. So you have to go to the higher time frame to start reading the structure. Don't make the mistake of reading the structure from lower time frame. Go to higher time frame to read the structure, and then you are going to get clarity on how to read structure. So on step index weekly time frame, this is the weekly time frame. There is no much information, but this information that the market has given to us is enough for us to read the market correctly. So here is what we'll just do. I start from breaks of structure, and then I am going to know the other flow of the market. So we have a break of structure here. This is a first break of structure. We have higher high and higher low. Then we have another break of structure to the downside. We have another break of structure to the downside. Now note, this is not just about higher highs, higher lows. Please note, this is not about higher highs, higher lows, and that is why you need to stay tuned till the end to know what I am talking about. If it is just higher high, higher low, the market will read you off completely. The market will read you off completely and still move in your way. So it is not just about higher highs, higher lows, lower highs, lower lows here. That is not what I am talking about here. So that is not what I am talking about in reading structure. So stay tuned to the end and see what I am talking about. So we have series of lower highs, lower lows, lower highs, lower lows, meaning we've been in a downtrend. Now, I think I made mention in one of my videos, one of my first videos, that if we don't have move back into internal structure, we have range structure. That means we have range structure. So if there's no good move back to internal structure, then we have it as a range structure. Now we have dips and shallow corrective wave. For this one, we have a deep corrective wave. I'm going to make the dips and shallow corrective waves in another video. I'm going to explain the dips and shallow corrective waves and their meaning. I'm going to explain it in another video, but here I am trying to explain how you can perfectly read your market structure so you don't get confused on the way, because sometimes you are going to mark a break of structure, whereas it is not a break of structure, it is just a liquidity take. Meanwhile, the market will display it in such a way that it is a break of structure. I will show you an example. In fact, I am saying one of it on this weekly time frame. So just stay tuned. Now, so we have a new break of structure also to the downside. This is a new break of structure to the downside. The market entered into the internal structure, so I can mark this as a new break of structure to the downside. I can mark this as a new break of structure to the downside. And the market entered for this leg. The market didn't really enter into the internal structure. So I am not going to be marking this as a new break of structure. This is part of what I am talking about. I'm not going to be marking this as a new break of structure because it didn't take any liquidity. It did not enter into the internal zone. So a lot of people will be marking this place out as a break of structure, as you can see. And after market breaks this high, they will just count it as a break of structure and they will be looking for a buy move, which is totally wrong. Imagine markets breaking this high and you are looking for a buy move. No, it doesn't work that way. It does not work that way. We have what we call inducement. We have what we call liquidity. So inducement happened here. Inducement actually happened here, and a lot of people will call it break of structure. So basically I am not marking that place as my break of structure until we have this inducement, until this high is induced. So this is my new break of structure to the downside. This is my new break of structure to the downside. And after we had this break of structure to the downside, this particular leg did not enter into my internal structure. This did not enter into my internal structure. It did not give something like this or like this. So basically I am not going to mark this as a new break of structure. Listen, I'm not going to mark this place as a new break of structure. I'm not going to mark this low as a new break of structure. Why? Because we've not entered into our internal zone. A lot of people will mark this place as a new break of structure. Eventually you are calling this a break of structure to the upside. You are calling this high a break of structure to the upside. You can see after market took out this high, a lot of people will be calling this a break of structure to the upside. A lot of people will be calling this a break of structure to the upside, whereas we've not had this move enter into internal zone. So we've not had this move, we've not had this area tested, we've not had it tested, and a lot of people will be calling this a break of structure. So don't make that mistake. We've not had a break of structure here until we have this high taken. That is when we can now say, oh, we have a total break of structure. We have a new break of structure. When we have this high taken, when this high is taken, that is when we can say we have a new break of structure. Then we'll be looking out for the market to take some areas. We'll be looking for the market to take some areas. So, and a break of structure does not simplify. It is a total break of structure. Okay. So we have this taken. So this is not our break of structure yet. This is not even our break of structure until we break this high. That is when we can start considering the market going higher. But for this, we've not had this internal movement. We've not had it into this internal range. We just had this break of structure, and this eventually can be an inducement. It can be an inducement. So we go to our daily time frame and we do the same thing. We mark out our structures. Please, this is how you really need to read your structure. Don't just read structure anyhow. In fact, I wonder how a lot of people will just go into the market and they will say this is higher low, this is higher high, this is higher low, this is higher high, and eventually just see them enter the market anyhow without being patient. You're not patient enough to see what the market give to you. You're not patient enough to see how the market displayed. You just feel you are trading what you feel. You are not trading what you are seeing. You just trade anyhow. It is very, very wrong. It is extremely wrong. So you really have to be patient enough to read the market structure from the higher time frame. Now, once you're able to read the market structure from the higher time frame, you don't have a problem. So here I'm going to be reading it from this. I'm going to be saying this is I have, okay, let me use this. I have a high, I have the break of structure here. I have a lower high, a lower low. A lower high that did not come into my internal range, but we broke it again. So meaning this is our last structure range break based on this time frame. This is our last structure range break. Remember our market structure formation that I explained in one of my video, where we have the structure range, where we have the range structure, the internal structure, and the minor structure. So this is our last structure range break based on this time frame. This did not enter into our internal structure, but we continue having a range structure. So we have a higher we have a lower high, lower low. We have another lower high, we have another lower low. Here we have a lower low, but this is an inducement for this structure range. So the market came back and took out this inducement. We have this break of structure. So the next break of structure is this. So this is our lower high. This is our lower high, lower low, lower high. This is our new lower low. This is our lower low, this is our lower high, this is our new lower high. Then we have this break of structure to the downside. After breaking this structure to the downside, this market, we had this lower low, we had this as a lower high. Now immediately the market broke this lower high. It is not a break of structure. We are not confirmed. We are not confirmed that we are into a bullish movement or bullish order flow. This is daily time frame. Remember, we still have the weekly time frame. We are still talking about the weekly time frame. So you have to consider all of this time frame. And as you can see, what the market did here, it came back into an area it did not induce. If you guys remember our primary inducement and our secondary inducements that I have explained, this only came back to an area it has not induced. The market came back to an area it did not induce, and after inducing it, the market moved to the downside speedily. Here, this is an area that we did not induce. This is an area we did not induce. We did not induce this high. The market came back to induce it. If you check the higher time frame, you're going to see it clearly, but the daily time frame has so much deceived that we had this place induced this high. Perhaps on the higher time frame we've not had that place induced. So immediately we broke this high. Immediately we broke this high. What I will be looking for is not a buy move yet. All I am going to be looking for is where is the last place market induced. So if I get the last place the market induced, if it is inside the range structure, I am just expecting the market to induce that place and continue to the downside, give me an entry confirmation, and then I start riding to the downside. So we have this break of structure to the downside. This is our last place where the market induced. This is the last place the market actually induced, where it gave us a good pullback. It gave us a good pullback. So after giving us a good pullback, we started having this movement to the downside, this impulsive movement to the downside, and we had a lower high, a lower low, a lower low. This is a lower high, this is a lower high, a lower low, a lower low. Now we broke this high. I am not looking for a buy move after we broke this high. The reason is because we've not had market come into this internal structure. We've not had markets come into this internal structure. And as you can see, when markets came back into the internal structure, it gave a very, very good reaction. There was a good move to the downside. This is a very good peep to the downside. You can see it gave a very good reaction to the downside when it came into the internal zone, but it couldn't sustain it because the market is going higher. The market wants to go higher. It couldn't sustain this energy. And one of the things I said was, if market is not going to use a particular PO high to continue to the downside, a valid PO high, if it's not going to use a valid PO high to continue to the downside, you will see an inducement. That is when you will see an inducement happen. That is when you will see an inducement happen. So we had this inducement happen and the market continued to the upside, giving us a break of structure. So where are we expecting the market again? You are going to look into where we've not induced, areas the market has not induced. Areas the market has not induced. Now, even if this market trends to the downside, and eventually come back to break this high, I'm not going to call it a break of structure. Why? Because we've not entered into this place internal structure. We've not entered into the internal structure. So I'm not going to be counting it as a break of structure. I'm not going to be counting this high as a break of structure when market comes back. I'll just count it as a means that the market wants to come back into this place because we had our last deep movement here. So I'm just going to count it that the market wants to come back here, and immediately market gives me an entry confirmation. I ride with the sell. It's very simple as that. It is as simple as that. You don't have to get the market complicated. Don't make the market get complicated. Just look into what the market is doing at a particular move and you are good to go. You're very good to go. So this is the internal movement I am expecting the market, and when market breaks this high, then yes, I am confirmed bullish for a while, and I will be looking for a bullish move to the upside. But until then, I will just have to hold on and see market display itself, and if I can get entry on the lower time frame, just the way I am reading this structure on the higher time frame is the way I will read it on the lower time frame. So we have series of higher highs, higher lows on H1 time frame. You can see we have series of higher highs, higher lows for this particular time frame. So that is how I'm going to restructure. We had the last deep movement here. This was the last deep movement. We broke structure to the upside, and this was the last deep movement also. This was the last deep movement. So if market comes back and take this low, meanwhile we've not taken internal liquidity. So if market takes this low, I'm going to be very watchful. Because the market can use this low to continue to the downside based on the fact that we've not taken external liquidity, and it can actually use this low as an inducement on the higher time frame. So I am always very, very careful. When it comes to the market, because the market is very fragile. It is very, very fractal. It will happen on the lower time frame. You will think it is a break of structure until you check the higher time frame, and then you are going to see a different thing totally from the higher time frame. And that is why you really have to be reading structure from the higher time frame so that you can get what you are doing. You won't get confused at the end of the day and feel the market is frustrating you at the end of the day. So you have to be extremely careful when it comes to the market. So that is just the simple way to read structure. Just stop complicating structure. It is very, very simple to read. Just read it according to how I read the daily time frame, the weekly time frame. You can read it same on the lower time frame. you can do the same on the lower time frame, and you are good to go, so that is just the simple way and basic ways to read structure. That is the simple way to restructure. Drop me a comment if you enjoyed this video. Just drop me a comment so that I can get motivated to do more, to make more videos for you guys. Okay guys, I'll see you in the next video. Stay in the atmosphere of profit, and bye guys.